Have you ever wondered how people can claim to own a part of massive companies like Apple, Tesla, or Microsoft without ever stepping foot inside their headquarters or being on their payroll? The secret lies in stocks, a simple yet transformative concept that has shaped the way businesses grow and individuals invest. Today, let's unravel what a stock truly is, why companies offer them, and how owning stock makes you a real stakeholder in a business. Imagine a company as a giant pie. This pie is divided into many slices, and each slice is called a share. When you buy a share, you're buying a literal piece of the company. The more shares you own, the bigger your slice of the pie. This is the essence of stock ownership, being a part owner, with all the potential benefits and responsibilities that come with it. But why do companies decide to sell pieces of themselves in the first place? When a business wants to grow, whether that means expanding to new markets, investing in research, or launching innovative products, it needs money. There are two main ways to get it: borrowing from banks or investors, or selling ownership stakes in the form of stocks. When a company chooses to sell stocks, it goes through a process called an initial public offering, or IPO. This is when shares are first introduced to the public, opening the doors for anyone to purchase a piece of the company through the stock market. Being a shareholder comes with unique perks. One of the main benefits is voting rights. Depending on the company and the type of share you own, you may have the power to vote on major corporate decisions, such as electing board members or approving mergers. Another potential benefit is dividends. Some companies distribute a portion of their profits to shareholders, rewarding them for their investment. And of course, there's the possibility of capital gains. If the business thrives and grows, the value of your shares can increase. You can then sell your shares at a higher price, making a profit. However, owning stocks isn't without risk. If the company's fortunes take a downturn, the value of your shares can decrease, sometimes dramatically. Not all companies pay dividends, and there's no guarantee of a profit. That's why investing in stocks requires careful research and thoughtful decision-making. In essence, stocks are a powerful way for everyday people to participate in the journey of companies large and small. They offer the chance to share in the successes, and sometimes the setbacks, of businesses across the globe, making them one of the most popular paths to building personal wealth.